Blockchain Chatter, the show where I connect with blockchain leaders for a bit of a chat. I'm your host, Dexter Cousins, and today's guest is an old friend of Fintech Chatter, Guy Dickinson, CEO and co-founder of BetaCarbon. Guy, great to be back with you.
Good to be back, Dexter.
Mate, it's been we first connected just before I think you entered the Finnies, and you were actually People's Choice Emerging Fintech of the Year, which is actually my favorite award because it's the one where not only do the fintech community get to choose it, but I actually do all the interviews. And last year's entrance, I'm always blown away, but last year was, I think, extra special. And you guys won by a landslide. I think you got double the votes of anybody else, which kind of showed, I think, just how resonant your mission is with the general public. So rather than me sharing what that is, would you mind telling our listeners a little bit about the BetaCarbon mission and the big problem you're solving?
Yeah, absolutely. The mission hasn't changed. The business has changed a little bit over that time, but primarily the job of BetaCarbon and Climber together is to allow the community at large to access carbon markets, but accessing those markets in ways which make sense to the retail market, the business market, and consumers at large, because the concept of carbon gets lost on them. So it's our job to re-narrate, drive it in through technology, and then deliver these markets at scale to try and move the needle on climate change on a positive side, as opposed to a negative side. My belief's always been that price is the driver of influence, perhaps never more so than in a recession where people feel like they don't have a lot of money to spare on philanthropy. And I think a lot of the time when you consider climate action, people think of philanthropy. It doesn't always have to be that. So if you're a business and you offset, that's not philanthropy. You get to go and make statements around your mission. That is marketing. Which is fine. If you're out there doing something positive and it's true to what you're doing, please tell your customers, because that's a flywheel of education. And then on the other side of the business, which is the digital assets and the Australian carbon token, you can go and put your money to work, get the flywheel of education going, get more people into that market. It's a market which has a supply which can't increase quickly. And if you create more demand off the back of that, you will drive influence in price, which means it's more expensive for people to emit carbon, especially as we're moving towards a safeguard mechanism, which is an ETS of types. And you're building a mechanism for more farmers or agricultural uses to put more carbon projects on. So you're hitting both sides of that equation.
So it's kind of like a positive inflation rather than the one we're going through right now.
Well, it's coming anyway. I think, and that's the big thing. That's the difference here. So we probably could have had this conversation in 2006. You know, if we think, or 2000, Al Gore lost by 750 votes. Let's put that in context. The guy was a massive greenie and he missed the American election by 750 votes. That was 23 years ago. Now, yes, we're 23 years later, but it just shows the urgency of the situation. Actually, all those things are correct. We're moving into a place where the doomsday scenario is actually playing out. Now, you can sit there and say it's not. I had a conversation this morning with a gentleman in PNG in an island called Puck Island. He told me that the traditional burial grounds where he has his family buried are now flooded. And they're not flooded by the rains, they're flooded by the ocean. He's had to move his ancestral burial plots up the mountain. Just to put that in perspective, it's real.
So I was in Singapore at the end of beginning of November last year. And I thought of you when I was there. And the reason why was that there was the key thing that I took away from it was that blockchain, I think, had finally arrived. And there were a few different elements where I think, certainly the Singaporean government sees that there's very strong use cases, kind of areas of ESG, climate change, and then the other was trade finance. And why I thought of you was because, you're probably one of the very first people that I've met who's come from an institutional banking background. and has embraced the power of the technology, not from a hedge fund manager, but has actually seen the use cases for the technology. And it was like, I kind of just thought, hat tip the guy, it's great to see that he's, almost like a pioneer in this space, but also that timing wise, kind of fairly impeccable as well. What's your sense as to, the kind of validity of interest from institutional banks in the technology, but also in this kind of climate change space? Is it particularly ESG? There's some seem to be serious, some seem to be doing it for the vanity metrics. What's your sense?
It's a big question.
It's a huge question.
It's a big question.
Yeah.
Let me first state that the timing comment, that it was good timing, was probably, can tip my hat to my wife, who, gave me a lot of, grassroots feel on the ground. She was talking about it. She also made sure that when I gave notice at the bank, it was at the right time.
Yeah.
So this was not something that I came up with the idea in May, and by the end of May I'd done it. This was probably a 12-month prior process.
Well, it's worth talking about your background, right? Because you were heavily into this space. It's not like
I was in the carbon space, I would suggest it, but I'd always been at HSBC. It was a fantastic role. I was head of markets, so we ran the markets business, traded FIC. I'd run a trading business in Singapore. I'd done electronic trading in the early days, where we'd built out new currency pairs in the renminbi and all sorts of, and I'd used technology to do it. And I'd done that on the side of my desk because it wasn't core to what HSBC was trying to do. HSBC's been around since 1852. It's not trying to be the funky new shiny toy. What it does is it follows fast. So let's go to that question around what's a big institutional thinking like? It's great to be able to talk about it, much harder to execute it. To execute anything with substance in a bank with more than 10,000 employees, my personal view is you need to completely bifurcate it from the parent. You need to take your best people, probably the people who are the most irritating to the bank, put them into that sub. Say, here's your budget, treat it like a startup, see if it works.
Yeah.
Otherwise, you've got a situation where everyone talks about blockchain, but so we got this token up within 5 months of forming the company. I was still, that's pretty quick to open an account with the government. That was most of the time. It wasn't the technology per se.
Yeah.
There's plenty of private blockchains you could spin up tomorrow.
Yeah.
But finding the right use case for it is a different thing. And saying that everything can be tokenized,
it can, but should it be?
But why would it be? Yeah, it just wouldn't be. And I think, I've sat with regulators and we discuss why it's a good use case.
Yeah.
Well, it's not like any other asset. There's no other assets like gold, which you can own and hold for the price appreciation or throw away. You don't throw away gold.
Yeah.
You hold it.
Yeah.
This, you hold a carbon credit as a market risk method, or you can retire it. That is tantamount to throwing it away. So all of a sudden you've got this asset class which doesn't make sense to a traditional market, which is why I think when I went into this space, I said, reputationally, I have a lot at stake, I think, here. And because of that reputational risk, I needed to make sure that when I used blockchain, every reason that sat behind it, even if it wasn't completely clear, like the rails weren't set up for me, I knew that I could create rails because I was doing it for the right reasons.
Yeah.
And I think that's clear, that the token's been out for, it's about 14 months now.
Yeah.
It's not new. We still, we have constant flow coming into the exchange. We're still in the carbon markets, buying and selling carbon. So we're relevant. We're a part of the ecosystem. Having said that, You've got big bank conglomerates putting together Carbon Place, which is 9 banks coming together, investing $45 million to create a carbon marketplace. With all due respect to the 9 banks, I've worked in big banks where there's consortiums to try and build something. It's very hard to bake a souffle with 9 cooks.
Yeah.
And without even considering the complexity and stratification of carbon markets, trying to inject a blockchain element to that, I don't think it's coming anytime soon.
Yeah.
There's a lot of chatter.
Yeah.
But here's the other kicker. You could probably build what they're building for less than $5 million in a startup. They've just invested $45 million into it. That tells me whoever's in charge of it isn't the right person.
Yeah. 9 times more meetings.
Correct. It's 100% right. And so while I love that banks are moving into the space, they're fast followers, especially big institutions. And it's a chance to pat themselves on the back. It's a necessary evil, 100%. Yeah. They have to do it. But it's very rare that consortiums like this are accretive to an organisation at large. So if you're a Carbon Place with Italian banks and English banks and other bits and pieces, I think they've gone slightly down the wrong road, because carbon markets are going to be more about tangibility and locality.
Yeah.
Just like you get patted on the back for buying your food close to your house, carbon markets and the way people interact with them is exactly the same.
Yeah.
And we have the data to back it up, because consumers, when they're clicking on a project with MJ Bale or Academy Brand or Oriton, they're choosing something close to where they live.
Yeah.
Victorians will not click on a Queensland project. That's probably an AFL thing, but they will click on anything but a Queensland project. Queenslanders will always click on Queensland projects. Even if there was something which potentially resonated with them more from a climate perspective, tangibility is everything.
Yeah.
So there's so many different parts to these markets. So it's the use case, it's the technology itself. How do you deliver something that's so complex with something that's so complex? And that's where we probably started by saying, let's just keep it simple to start with. Yeah, and that's how we got a product out. But it hasn't needed to be more than it is to this point.
Yeah,
but we have big plans.
That whole tokens, the whole experience of going on the platform was simple. I think I've looked at the platform 3 or 4 times to see where the price is at. It's just a really easy experience.
Glad that's what we built for.
Yeah, and it's kind of, the times I go back and check isn't because of the price. I think I just want to remind myself that I've actually been able to invest in the carbon markets, right? Not just holding the token makes me feel affiliated to the mission and to the business, which I think it's from a marketing perspective, how much would you have to pay if you were a large corporation in advertising and branding and everything else to get that emotional connection?
Well, it's a really interesting question, because I think one of the things that springs from the word marketing and climate is greenwashing.
Yeah.
This can get pretty sticky pretty quickly.
Yeah.
And I'm also extremely pragmatic, and I would prefer to see en masse action as opposed to en masse discussions. Because if the action's in the slight wrong direction, we can redirect that movement, that momentum. And there is definitely a place for every company to do something, even if it's your rubbish or whatever it is. Like if you can reduce, and that's a great thing to do, and we'll all do it, but we aren't going to go anywhere near where we need to go. So carbon projects or climate projects are going to be part of the mix. So is technology. And actually technology is probably going to be 70% of the solution. And it's heartening, right? It's not that bad as long as we can direct financing to the right place. So I see a benefit for large institutional names, and not banks. I'm talking about the multinationals, that are out there selling consumer items. They are going to spend an inordinate amount of time measuring themselves. which they have to do. But that doesn't stop them doing something more meaningful around supporting impact around the solutions to technology or nature-based. And I'd like to see more of that. And we have a second brand, which is called Climber. So we started off, it's probably worth talking about the genesis of BetaCarbon and what I thought it was going to be to what it is. And this is exactly...
Well, I did have a list of questions, and then I thought, sod it, I just want to have a chat with you, right? Because we haven't spoken for so long, and we're sat here in person. So, this is now running perfectly without the questions.
So we ended up with this token, and I thought that because I was in it, I understood it, and I figured everyone else did as well. But actually, the research, and again, we've done a lot of research, suggests that the concept of carbon is lost at a grassroots level. Unless you go down that rabbit hole and come back up like you did, you won't get it. You'll think it's something else than what it actually is. And when we went to merchants and brands and said, make this your reward scheme, it'll make a difference. And it would. They very rightly said, it's too early in its current form, and our customers won't understand it. And I went back and I went, oh God, okay. How's that going to land? So I still knew that there was still no access to the market. That still existed. And we stayed on that mission of building the exchange around investment. Climber, which is it's been born of BetaCarbon, is an offset retail solution that delivers carbon credits at scale through technology solutions.
Right.
We integrate into point of sale systems.
Right.
The big difference is we make the merchant pay. It goes back to that first thing. I click on Qantas once because they make me pay. Because that's putting money in their balance sheet.
Yeah.
What I'm saying is if I'm going to buy a pair of jeans or go on a flight or use a lawyer, I'll get to the lawyers in a minute. I want you to be doing something. Show me that you're doing something around climate, because I could ask anyone who's watching this video, do you care about climate? None of you will say no. Not one of you will say no. Be prescriptive about what you're doing, but don't fear. If you're supporting a climate project and I'm giving you agency over that project, which project you get to choose at the end of the journey, fantastic. Now that product works for people who are carbon neutral, and they'll go, click on a project, we're carbon neutral. There's also brands who just want to start looking at it. You don't go from 0 to 100 in this space. So they choose to support at a minimum level to play, which is generally around 10 tonnes per employee. And then you'll get to choose a project, and it'll come up at the end of your point of sale, or if they want to, put at a different point of that thing. It doesn't cost you anything. You're just getting agency in how that brand is going to use their money to support that climate project. Now here's the kicker. We're getting estimates are somewhere between 7 and 12% of people will click on, they'll click on the Qantas offset one. For us, it's closer to 50.
What?
50% of people are clicking. They care.
Wow.
They care. So
50%?
50%.
Checkout.
Correct.
Wow.
And they've already finished paying. They could have gone. They're giving us a minute and a half learning about projects. It's an education flywheel. We get feedback from other CEOs who go to the companies that are in there, to the CEO, go, what a great initiative. That I get to buy an awesome suit from MJ Bale, or I get to buy a beautiful handbag from Oriton, and then the last thing you did was give me a little bit of agency over how you're going to support the planet. That's great. And the messaging is really important, because as that messaging increases, you want to get more involved. And I think you probably experienced that when you went down the carbon rabbit hole. And you pop back up and you go, actually, there's something here.
I didn't go down the Web3 rabbit hole, but I did go down the carbon one. Now, which leads on to my next question, which is really around the technology. So I think when we initially caught up, you were on Ethereum. This was pre-merge. Is that still the case? Are you still sticking with that technology? And what kind of differences have you seen since the merge?
So we always built it on Ethereum knowing the merge was coming.
Yeah.
It was about 6 months late, unfortunately. We are carbon neutral. We can claim that neutrality, and we've actually made all the on-chain transactions carbon neutral as well. So from the beginning of the whole experience, we've bought Australian carbon credits to offset ourselves from day one. So when you're buying a BetaCarbon token, you know that it's carbon neutral to start with. That was important because we always knew that it was going to be a pretty hefty load while it wasn't going through the merge. Once it has, it's tiny.
Yeah.
Moreover, we always had a view to build an exchange of our own. So it's off-chain. You know, the fact it's off-chain, again, it's infinitesimal, it's tiny. That will be measured, that will be offset through the life of the thing. Is it working? Yes, it's a very solid blockchain. That's why we chose it. At the time we went out, some of the others like Solana, etc., had been going through a little bit of hullabaloo. They weren't having the funnest time. There's a lot of hacking.
Yeah.
And we figured, okay, we've got Australia's national climate currency, effectively. Do we want to be messing around with the security at this? And we just figured that while there was this counterintuitive thing that it's a big environmental load when we went out, we always knew that it wasn't going to be as well. What I would say is, as we move towards perhaps a more on-chain integration across how we pay at a grassroots level, we absolutely have been looking at different types of blockchains. What that means for us, we've been looking at private blockchains as well for institutions. And for me, it's really a use case requirement. My point is we built the exchange. Most of the trades are off-chain. It's light from an environmental perspective. What is another blockchain going to offer me apart from perhaps on-chain transactions, which are a lot cheaper? I always directed this product to Australians. That was kind of my view. Now, people offshore can buy it. It's on Uniswap. Please do. But I want a domestic audience, and it goes back to this concept of a global carbon price, which is nonsense. Everyone wants it, but it's like saying every country is going to have the same tax rate. It's exactly the same as saying that. It's never going to happen. It needs to be local. Yeah. And so when I thought about all those things, Ethereum allowed me it gave me comfort from a security perspective. When we issue the next asset, there's a high probability of being on a different blockchain.
Right. Obviously it was a tumultuous year last year for not necessarily blockchain, but crypto. Lots of bad stuff happened, which kind of felt a little bit reminiscent to 2008 in the banking industry. Do you identify yourselves as a blockchain business, a climate change business? Where do you kind of see yourself, or are you hybrid? What's it?
The answer is yes.
Yeah.
I think we definitely saw ourselves late 21 as a blockchain business. Yeah. But it was always to facilitate the use case.
Yeah.
If carbon was freely available and it had worked on legacy transmission systems, it would have already been out there, right? So for me, it was a use case concept. Now, when you had everything going crazy and going up, of course, the whole room was buzzing that we're a blockchain. Yeah. It's like, that was a momentum you couldn't fight.
Yeah.
But we also said, because people came to us, it's not going up like everything else. Well, it's kind of because it's a carbon representation here. So it's not meant to. We designed it to not have FOMO in it.
Yeah.
We designed it so that it should be a fairly close representation to the price of carbon.
Yeah.
And we saw that as everything got decimated, it helped carbon price. That's what we built. Now, it may have moved, around the edges of it on a daily demand and supply. That's what we designed it to do. So we were super pleased to see that.
hedge for Bitcoin then, would you say?
Well, we had some people come through and sell some tokens to buy Bitcoin. It went down another 50%.
Yeah.
And they're like, oh, yours actually, it went up 10% while Bitcoin went down 40.
Yeah.
Like you said, just hold it for the reasons you hold it. This is it's not a 5-minute asset. It's probably a 4 to 7 year asset hold for me.
Yeah.
Especially in Australia.
Yeah.
So what I'd say to the viewers and the listeners is, when you hear the word carbon, you need to go and find out what carbon you're talking about, because it's as different as cars.
Yeah.
There's more, actually. And ask yourself the question, if someone offered you a really crappy car, do you want it in your driveway? And most people say no. They don't want a crappy car. And the same way, do you want a really nice car in your driveway? It's going to cost you more.
Yeah.
And we see cases of that time and time again where corporates try and meet price expectations in carbon markets and are disappointed by the reputational risk they're taking on board because of that.
Yeah.
You get what you pay for.
Yeah.
Since day one, you've always got what you pay
Yeah.
for. Australian carbon credits are $35 to $40. Some of them are $70. The price does reflect the community expectations around what you're getting.
You talked about reputation earlier. Kind of what were you going through emotionally as the kind of crypto markets crashed last year and stuff like FTX came out? And, you've talked a lot about regulators and getting them comfortable. How was it sitting with you where you've talked about the carbon markets where there's challenges there and it's fairly new and you kind of have the cowboy element and then the crypto kind of cowboy element? As somebody coming from a banking background where, look, there's stuff out there, right? And it's well documented in the press. But I've dealt with thousands and thousands and thousands of people who worked in banks over my 25 years in recruitment, and 99.9% of them are really good people who really care about their customers, probably a bit frustrated that they're in an environment where oftentimes, just because of the challenges around technology, bureaucracy, they're stopped from doing that. So how was it for you? Is that, that world's crashing around and you're thinking about your reputation and you've left a great job at HSBC. Is there any point where you're thinking, what have I done?
Not in terms of, have I done the wrong thing by leaving HSBC? HSBC gave me an amazing career, amazing platform, amazing set of values. It also taught me what I didn't want to be anymore, which was constrained by incumbent views around technology and being constrained around the concepts of less pragmatic than I was willing to be.
Yeah.
And I think I probably should have seen it coming a couple of years earlier, if I'm honest. When everything was falling apart, we weren't.
Yeah.
And I built that. So I was quietly patting myself on the back saying, yeah, you didn't get all the joy and FOMO on the upside, but look at what you're feeling now.
Yeah.
Yeah, you're feeling pretty safe.
Yeah.
No one's calling up. No one's calling up going, get me out of these tokens. No one. And that was a testament to what we built. And I can probably put that to banking.
Yeah.
Banking taught me about portfolio management. It taught me about structuring. It taught me about how to build things to a level where an institutional relationship would want to take that on board. And that's what I built. I think the issue was institutions weren't ready to buy either carbon or blockchain. But God, they're moving into that space at pace.
Yeah. How do you feel now, having kind of resisted the urge and the FOMO stuff? Do you feel vindicated, or do you just feel now energized that? And I remember feeling this in my business around 2018 when the business was about 2 years old, and it was actually Cybos. I'm laughing because I've still got the Cybos bag.
Yeah, I remember.
2018 in Sydney, and it was the moment. I remember I went home to my wife and I said, "Look, we've backed the right horse. Fintech is going to be huge. I know we've kind of, it's been sporadic the last 2 years." And sure enough, end of 2018, and so from 2019 all the way through to mid last year, it was, raining clients and kind of great business. And that, I just remember that moment of feeling vindicated. I wasn't stupid, I wasn't crazy. Did you get that moment when kind of you could see that it was that steady state, and you hadn't kind of gone all in and chased the FOMO, and you hadn't chased the investment dollars of going, we're Web3, now we're crypto.
Well, it's a really good question. As I said, we definitely took some of that momentum on board when we raised in January last year. If you're a construction company, you could have put a crane near a park and raised $20 million then. It was pretty easy.
Yeah.
I think when I think about the challenges that we faced through that period, they were challenges around product market fit, not whether we're in the right market.
Yeah.
So it'd be no different to you saying, this is how I'm going to go get clients, or this is how I'm going to place my people. We just need to find what that was, and we've done that. So from a climate perspective, we're here to stay. This isn't going away, because that convexity to 2030, which is really what we're talking, it's actually 2028. It's 84 months, it's 82 months away until 2030. Like, you think about the glacial speed of banks, large institutions, governments. Actually, I'm kind of emboldened by how much the government has achieved. And I'm going to get a little bit political here, but climate has generally fallen down because of the far right and the far left.
Yeah.
Thinking that we can all go from either 100 to 0 or 0 to 100. No one operates like that. You don't go to the gym and lift 200 pounds. You don't. You work up to it.
Yeah.
And I think the policy is fit for purpose. I think the far-leaning left need to realise that this is progress and buy into that progress, and not fall into the traps of yesteryear around thinking you can get everything today. Because actually, voting teal, like we did at large, they weren't saying that. You got a few extra seats in the House. That's great. Like, that's progress. And to the far right, not even the far right, the right, who deny it, please call my friend and help him move his ancestral parents to a drier spot.
Yeah. When we first met and you explained the kind of economics behind carbon, and the carbon token and carbon credits, I walked away and I thought, that's how Bitcoin was meant to work. And my question, and this is kind of one of my views, is I think actually carbon is probably going to be a key value exchange in the future economy. More so than Bitcoin. I'm absolutely convinced of that. What's your kind of thinking around that? And how far off do you think we are from seeing almost like a new world order where energy becomes then almost like the currency?
Yeah, I don't know if we're ready for a carbon currency. It would, for me, I think it will go down the road of being embedded in the product.
Yeah.
So when people talk about carbon being a tax, it can be if you're not doing the right thing.
Yeah.
If you actually have set your business up to do the right thing, it can be a pull, right? It can drive more revenues. Carbon touches everything. I mean, I've got 2 or 3 different enterprises in carbon. Some of them are at project level, some of them are at fintech level. One of them's an ag tech business. Carbon touches all. It does touch everything, and I think that's where it can get lost.
Yeah.
Which is, so we need to take that stratification, bring it in, and go, okay, what are we talking about in this conversation? So, and I think consumers at large, or people at large, they just want to buy whatever they're buying, but they wanted to know that by buying that, they're not bad people.
Yeah.
And it's the job of companies like us to simplify it. It's all about simplification. And everyone who's out there who complicates it for small business, they're clipping a ticket, because it's not that complicated. It's really not. If I asked you to input, you're a small business of 25 people, Not tiny, but it's a small business, 25 people. You could put in the data to give yourself a reasonable calculation in a couple of hours into a piece of carbon accounting software. You could go to a carbon consultant. Some of them are really good. Some of them are less really good.
Yeah.
And they could charge you $10,000 to $12,000 for that privilege.
Yeah.
Now, where would $10,000 to $12,000 be better spent? Possibly on an impact project, or supporting a climate project, or making your business offset so you can claim neutrality and then tell your customers about it. There's so many different ways, and I'd prefer to see that pragmatism at a certain level of enterprise in the economy, because there's a lot of wasted effort. Actually, the carbon footprint to measure for some of these is bigger than the carbon footprint of the businesses they're measuring in the first place.
You know what's really cool chatting to you today? When I did the People's Choice Awards, I was speaking to quite a few fintechs who'd been around maybe 4 or 5 years and had gone on similar journey to yourself, started out as B2C and then evolved into B2B or B2B2C kind of platform play. But that process had taken 4 or 5 years. Here we are, not even 12 months on from when we had our first chat, which I think was April last year. And you've already not only figured that out, but you've got it out there and you're about to launch. You just give me the first business card today there for Claimer. When will Claimer be having its official launch?
Like all things in climate, you shouldn't make too much fanfare about them.
Yeah.
We're in about 10 organisations already. Some of the bigger ones: MJ Bale, Academy Brand, Bondi Born, Oriton. These are good labels.
Yeah.
They see value in educating their customers around what this is. They see value in the tangibility of what this is. I'm really excited about the non-customer facing businesses too. Professional services. And this leads me into the lawyer conversation very quickly. So we do our carbon accounting, and we used a accounting software to do it, and then we got it validated by a carbon accountant so we could get the Climate Active label. Did the calculation change? No, but the audit got audited.
Yeah.
You don't even have to do that to run a company. So I think for an organisation of 10 to 12 people, you shouldn't have to do that.
Yeah.
But I spent a lot of money on legals last year because we have a lot of complex legal things we had to deal with the regulations, etc.
Yeah.
We did. Now, a lot of my spend was on lawyers, and my biggest carbon liability came from professional services, accountants and lawyers. So I imagine those accountants and lawyers have hundreds, if not thousands, of customers. Let's say I had to spend $2,000 on carbon because that lawyer isn't carbon neutral. He does that with 1,000 customers.
Yeah.
That's a lot of money. That's $2 million that people are buying carbon, when actually if they went and spent 100 grand themselves, I wouldn't need to be spending that money. So there's actually a chance that if we don't start getting the entire economy involved in actually measuring and checking out what you're doing and offsetting it, the liability for businesses that are doing the right thing is actually higher than it needs to be, even at an economy level. Because if that lawyer had spent 100 grand, the other 15 customers, when they're all 1,000 customers, when they're all carbon neutral, won't need to spend $2 million. So that's where this flywheel of the B2B idea came up, where the same way you let a customer engage and give them agency around which projects, we now allow B2B customers to do that. And so we've got some really great pilots going on with some big professional services firms, where they're giving agency to their colleagues. And we know that matters. Look, to be quite frank, HSBC's a pretty sustainable bank, but it wasn't enough for me to stay.
Yeah.
If I'd seen something more overt where I had that agency, probably would have stayed.
Yeah. Well, Guy, we're coming to a wrap up. I've got to say, this has been such a great chat, particularly in the context of why I started Blockchain Chatter at the end of last year. we've hardly talked about blockchain, and I think that's actually how it should be. The technology should sit in the background and enable these real use cases. And I think today's chat is really, to me, kind of symbolic of, where the industry is. It's really ready to kind of flourish and to kind of permeate through, society, and actually, real tangible use cases that, the BetaCarbon tokens that I've got, first tokens I've had, and I've had many, right, that actually have a utility, right? It's and it's great, I'm not just looking at the price and getting
I wonder where it'll be today.
What can I buy with it? It's and so it's kind of, I think it's just such a kind of great thing to just kind of stop and just kind of acknowledge that after 10, 12, 13 years of the technology, we are now at the point where it's not just payments. It's actually all these other applications that we're starting to see. So it's great to see. Not only have you been able to go the BetaCarbon business, but now you're looking at other and I think great for the life cycle of the business as well, that you can extend it out to B2B. Because particularly in Australia, it's very difficult to be consumer focused only.
It is. I might thank you for the time today, and I think one of the things that we probably didn't get into, maybe for another chat in 9 months' time, but the social aspects of this, even the blockchain piece, right? It's if we can create transparency. I'm going to regale one little story. You can edit it out if you don't like it.
Go for it.
One of the issues that comes with carbon projects is the lack of transparency. We solve that. You can go online and see where the price of carbon is on our exchange, times it by 1,000. It's going to be a great representation of an ACCU, right? 24/7. Otherwise, you can't see it. Please go find it outside us. Take a Aboriginal savanna burning project where the traditional owners were getting paid $12 for a project because they didn't know where the market was. And then someone tells them, oh no, we bought it for $50. Blockchain has created transparency, which has relegated that arbitrage by a great deal. There's always going to you're going to pay someone on the journey. But that arbitrage isn't 300% anymore. And that's the power of blockchain.
Yeah, fantastic. Right, where can people, first of all, BetaCarbon tokens, where can they go?
Sure. So there's a few venues. You could go onto Uniswap and buy it fully decentralized on-chain, if you like. You could then buy them, send them into our exchange. We can hold them in a segregated vault for you if you want. Or you can sign up on the exchange like you did. You put in some details and we'll do a quick online verification. You can get set up in a couple of minutes. You can pay ID your money in, you purchase. It's super simple. Please don't go in there thinking this is going to look like Binance. We did that specifically. You'll be able to see how many tokens you've got, how many kilograms that is, what that is worth. You can buy and sell at any point. And it's a case where we want people to have a venue where they can log in, show your friends, this is what I've done, this is what I know about carbon. And you can actually hold a conversation around it because it's so simple. You go, oh, is that what we're talking about? And the funny thing is, to tokenize something which is quite ethereal anyway, kind of makes sense. Tokenizing something which is heavy and I don't see the point. So it's a funny thing.
I'm pretty right. I was watching the movie Heat with Robert De Niro and Al Pacino, where they do the bank robbery. And one of the first robberies that they do, they hit a security van and they steal $1 million in bearer bonds. And they're just bits of paper. And you go, oh, that's what a bearer bond looks like. Right? And you think, why would you need that bit of
exactly.
paper? Right?
Exactly. And then the last place to buy is you can buy OTC for if you've got a super fund or a trust. That's KYC's a little bit deeper because we have to go through that DD. And then you can have a segregated vault in the exchange for that as well.
And where can people find out more about Climber?
So Climber is on climber.com.au. You can go in and see the list of projects. Now, Climber is an offsetting business as opposed to the Australian Carbon Token, which is you're taking a price participation. So Climber is really about real world solutions for businesses and merchants to engage your customers and your colleagues. Climber.com.au.